In 2008, one bank managed to destabilize the entire world economy in weeks. Irresponsible use of margin, lying to investors, and destroying millions of families' savings. This is the story of how the Lehman Brothers defrauded America. Just a year before the 2008 financial crisis, Lehman Brothers was at the top of its game, reporting a record high net income of over $4 billion and holding a market capitalization of almost $60 billion. But in a matter of months, everything changed. Following the near collapse of Bear Stearns, Lehman Brothers stock took a massive hit, plummeting almost 50% in just a few short weeks. And it didn't stop there. By June, the company was reporting its first quarterly loss in over a decade, signaling the beginning of the end for the once mighty investment bank. But investors were told everything was under control.
Every one of you should feel confident and proud. Our firm is strong today, and we will emerge from this cycle even stronger. We've done it before, and we will do it again.
On the 15th of September 2008, Lehman Brothers filed for bankruptcy, sending shockwaves through the global economy and leading to the worst financial crisis since the Great Depression. But how did it all happen? In this video, we'll explore the rise and fall of Lehman Brothers, from its origins to its catastrophic collapse.
You're really that worried about Goldman Sachs and Lehman Brothers?
Yes. I'm afraid the Federal Reserve will eventually or come close to bailing them out. That's what I'm concerned about.
How it began. Once upon a time in 1844, a small general store in Alabama was owned by a man named Henry Lehman. Little did he know, this store would eventually grow into one of the most influential and controversial institutions in the financial industry. As time went on, Henry's brothers, Mayer and Emanuel, joined the business. And together they transformed the humble store into a thriving cotton brokerage. But they didn't stop there. The Lehman Brothers had a knack for recognizing opportunities and taking risks, and they soon expanded their operations to include investment banking. Over the years, Lehman Brothers became synonymous with wealth and prestige, with a reputation that spanned the globe. But in the early 1900s, the company made its foray into investment banking, partnering with Goldman Sachs on an IPO and underwriting nearly 100 new equity issues for some of the most notable companies of the time, including Macy's and Studebaker. Despite facing major national upheavals such as the Civil War, both World Wars, and the Great Depression, Lehman Brothers managed not only to survive, but thrive. Through spin-offs, mergers, and many changes, the company became a commodities brokerage and eventually became one of the most prominent players in the investment banking industry. 20th century growth. In 1984, American Express acquired Lehman Brothers for a cool $360 million. But a decade later, American Express decided to spin off the investment bank in an initial public offering, IPO, that raised over $3 billion in new capital. How did Lehman Brothers fare in its newfound independence? With the repeal of the Glass-Steagall Act, which previously prohibited banks from conducting both investment and commercial banking, Lehman Brothers expanded significantly by offering both services. Despite the horrors of 9/11, Lehman Brothers emerged as a dominant force in the investment banking industry. And by 2007, it had grown to become the fourth largest investment banking firm in the country. But with great power comes significant risk. And much of Lehman Brothers' growth and profitability came from considerable investments in mortgage-backed securities, MBS. These investments ultimately led to the company's downfall and triggered the 2008 financial crisis that rocked the global economy. The 2000s. In the mid-2000s, Lehman Brothers was swimming in mortgage-backed securities, MBSs, and collateral debt obligations, CDOs, thanks to the housing boom. By 2007, Lehman was the largest holder of MBSs, which made its collapse all the more catastrophic. But what sealed Lehman Brothers' fate was its foray into loan origination in 2003. The company acquired several lenders that focused on providing subprime loans, which were being encouraged by the US government. And as we all know, subprime loans are the riskiest of the risky. Lehman Brothers had unknowingly placed all its chips on a single precarious bet. Considerable investments in MBSs filled to the brim with subprime mortgages. And when the housing market crashed and those MBSs plummeted, Lehman Brothers was left with a massive pile of toxic assets that it couldn't sell or even value accurately. It was a financial disaster of epic proportions that sent shockwaves through the global economy. More errors. Lehman Brothers had bet on the housing market, pouring billions into mortgage-backed securities packaged and sold to investors as safe bets. But as the market began to slow and the defaults on subprime mortgages increased, Lehman found itself in a precarious position. The company had invested heavily in a market on the brink of collapse, and its fate was sealed when it bought up over $100 billion in mortgage-backed securities and assets in 2007.
It seemed to be into two camps of, there was a group of people who were just waiting for the next shoe to drop, and then there was the people like, okay, we weathered the worst. It's hope for the best, prepare for the worst, kind of mentality.
Lehman Brothers was hanging on by a thread. The 150-year-old financial giant was bleeding billions, and its risky investments in the housing market were now a ticking time bomb. The collapse of its main rival, Bear Stearns, had left Lehman in a vulnerable position. To make matters worse, the company's attempts to raise equity had failed miserably, and the future needed to look better. Lehman Brothers was on the brink of collapse as the third quarter of 2008 drew to a close. The fate of one of the world's largest investment banks hung in the balance, and the world held its breath, waiting to see what would happen next. The Great Fall. The situation at Lehman Brothers was dire, and it was clear to everyone that the company was in deep trouble. Richard Fould's attempts to save the company were seen as futile, and investors began to pull out en masse. The swelling of credit default swaps on Lehman's debt clearly indicated that investors were no longer willing to take the risk associated with the company's assets. Even major hedge fund investors who had been heavily invested in Lehman began to back out. After Lehman Brothers filed for bankruptcy, Barclays and Nomura Holdings acquired most of Lehman's investing, investment banking, and trading operations. Barclays also acquired Lehman's New York headquarters building, now known as Barclays Capital. However, it is essential to note that the acquisition of Lehman's operations by Barclays was not without controversy, as there were concerns about the potential risks associated with the purchase and its impact on Barclays' financial stability. The failure of Lehman Brothers had a significant impact on the more comprehensive financial system and is often seen as a critical trigger for the global financial crisis of 2008. One reason why Lehman was allowed to fail was the need for a clear legal framework for dealing with the failure of large, complex financial institutions. Unlike banks, which are subject to regulatory frameworks that allow for orderly resolution in the event of loss, investment banks like Lehman were not subject to the same rules. As a result, policymakers and regulators faced difficult decisions about how to deal with Lehman's collapse and its potential to impact on the broader financial system. Another factor that contributed to Lehman's failure was the complex and interconnected nature of the financial system, which made it difficult to assess the potential impact of Lehman's collapse on other institutions and markets. This uncertainty created a climate of fear and panic, leading investors and other financial institutions to withdraw their support from Lehman and other vulnerable institutions. Finally, the decision not to bail out Lehman Brothers may have also been influenced by political factors, including a desire to avoid moral hazard and a perception that the government had already provided too much support to the financial sector. In any case, the failure of Lehman Brothers remains a contentious issue and continues to be the subject of debate and analysis in the years since the global financial crisis. Now, we want to hear from you. Would the US government have bailed out Lehman Brothers, or was it necessary to allow the market to correct itself? Leave your answer in the comments below. And remember to like and subscribe for more informative content on the financial market.